Is this the calm before the storm? Tensions in the Middle East escalate again.
Attack on his military base leaves more than 30 dead and injured. It's been months.
For the first time, the US military publicly admitted to the outside world.
As soldier killed in attack in Middle East.
The only previous death. Or contractor was attacked, scared to have a heart attack.
As soon as the casualty notice comes out,
there was an uproar in the United States. Islamic resistance groups come forward to claim. But who exactly ISIT?
Still confused.
US military power.
When facing war between countries, of course, it's very powerful.
But faced with this, an armed organization like Flowing Water and Air, I feel so confused that I don't know where to cut with a 40-meter sword.
Republican leader Graham accuses Biden of being too weak.
Strong demand to send troops to show the color of Iran behind the scenes.
If Biden doesn't take some action next.
Just take the loud thunder. Raindrops strongly condemned the perfunctory work.
Obviously unable to explain to domestic voters.
But if we choose to go to war with Iran, it is not an expanded war that can be ended in the short term.
It also goes against the name of the United States.
The latest news coming is US Military Transportation Command
begins to mobilize aerial tankers to the Middle East
and American social networks.
It started to spread
rumors that Biden has the most important decision to make.
There is also news that Iran's air defense forces enter war.
Iran in the Persian Gulf
continue to seize cruise ships from Western countries, etc.
General election is coming.
There is a commotion in the country. Now the Middle East bases are also coming to join in the fun.
One wrong move.
So lose the other. Lose everything. What will Biden do next? The whole world held its breath.
Crude oil markets are particularly tight.
Sword of Damocles.
Is it already hanging directly above the Biden administration is? Will they retaliate against Iran by fanning the flames, leading to an escalation of the entire crisis?
Analysts said.
The biggest uncertainty is United States and its allies.
Whether to decide to take tough action against Iran. Iran's crude oil exports have increased to 1.5 million barrels per day.
Any further tightening of sanctions may lead to increased uncertainty. Next, let's look at individual stocks. This is another one of my personal core holdings, Amazon. Amazon will report earnings after the market close on Thursday, February 1st.
Analysts expect.
Against the backdrop of revenue of $166.25 billion,
the company will report earnings of 79 cents per share.
Last quarter,
Amazon e-commerce sales momentum continues. Black. Record sales on Friday and Cyber Monday.
Points to strong holiday shopping season. Within the past 90 days,
earnings per share have been raised a total of 26 times.
Recently, the most important thing is financial discipline at Amazon.
The company's post-COVID-19 experienced a huge spending boom. Capital expenditures significantly exceed operating cash flow.
However, the latest results show
positive free cash flow is constantly improving. Companies have laid off thousands of employees in the last year,
and this process is still going on. The economic impact of mass layoffs in 2013, not yet fully reflected this year,
because the company offered laid-off employees,
offered a generous severance package.
However, by 2024, as the pace of layoffs naturally slows, the impact of severance pay may be much smaller. This will also help profitability in the next financial year. Also, in recent months,
energy prices are well below yearly highs. This will certainly help the overall inflation data. At the same time,
the company itself may be saving a little on fuel costs.
Short term, the biggest driver is currency forex trading.
Will have a beneficial impact on sales.
All in all, the financial report itself should be good. But if AWS data collapses,
or maybe management's expectations are slightly worse, will be punished by the market. Let's continue to look at Amazon's basic panels. Let's take a look at Amazon's various business segments.
Each has its own challenges and opportunities.
3 areas of focus for Amazon in the coming years includes third-party online stores, advertising and cloud areas.
First, the company focuses on third-party online sales.
This one needs no introduction. The brand has long since become a household name, often the first choice when people are looking for products online.
Expected to be 2027. Global e-commerce sales will grow at a compound annual growth rate of 14.4%. As a primarily consumer-oriented company,
the company also faces
possible economic recession. Risks include rising credit card delinquency rates. Signs of rising bankruptcies continue to emerge. This could impact Amazon's e-commerce sales. International expansion faces competition.
For example, TikTok is also preparing to launch e-commerce in the United States. The goal in 2024 is to increase transaction volume by 10 times.
There was Pinduoduo before, then there is TikTok. Unless the US government comes to an end.
Otherwise, you will be killed.
News come on.
From early 2024, Pro video shows and movies will contain limited advertising. Customers can pay an additional $2.99 per month to make these ads disappear.
Introducing advertising at the same time may be counterproductive, if not done well.
The company may lose customers as a result. But once Amazon implements the $2.99 monthly fee, they have a reason to allocate more money
to enhance their video library.
Next is the cloud field.
Cloud is undoubtedly Amazon's holy grail of growth.
The company currently
owns the largest share of the cloud infrastructure market.
But when you already have more than 30% of the market share,
above-market growth seems unlikely.
Currently, Microsoft, Azure, and Google.
Cloud is growing faster than AWS, fortunately. The cloud is a very big place, expected to maintain rapid growth for many years to come.
So there's room for multiple big winners.
As businesses loosen budgets
and increasing demand for artificial intelligence,
expected to be between 2023 and 2030,
global cloud computing market
will expand at a compound annual growth rate of 20%, company management said.
About 90% of the world's companies currently operate locally.
However, as technology advances, in the long term, these businesses are expected to transition to cloud services.
Therefore, the strategic positioning of AWS to benefit from these emerging technology trends. Finally, the company's advertising business also achieved positive results. Amazon through search advertising,
projects such as display advertising and video advertising,
to sell a supplier publisher, authors and others provide advertising services. In an age where consumers are budget conscious,
when brands consider budget allocation,
they may favor Amazon because its sales volume is higher and its performance is superior. This trend is expected to maintain and drive the company's advertising sales.
Future estimates of global ad spending.
Amazon is expected to grow faster because he continues to get the most out of Google and Meta,
sees market share from other companies.
In addition, in terms of AI,
similar to Microsoft,
Amazon should also benefit from the rise of artificial intelligence.
Benefit greatly.
Amazon's vast trove of personalization data
should be able to help the company
developing better artificial intelligence
to better predict consumer behavior,
led to more effective search results,
more convincing advertising and higher sales. In this regard, Amazon launches new tool for large language models, helping developers with their Voice Assistant X create a more interactive and intuitive experience on.
Amazon CEO pointed out, expected deep artificial intelligence
will be in the next few years, bringing tens of billions of dollars in revenue to AWS cloud services. Other aspects.
Amazon is also promoting low-orbit satellite internet services.
This could become another successful tree for the business.
Cash cow similar to AWS.
Overall,
Amazon is a very complex company.
In technology media, various fields such as medicine and groceries,
has more than 100 subsidiaries. It's also a very unique company, trying to do too many things.
From satellites to shoe sales, everything from media video to enterprise software,
has many different business units.
Each of these sectors brings its own challenges and opportunities.
The company's current pricing errors.
The range is very large, as always.
The future is unpredictable.
The truth may lie somewhere in between.
Standard & Poor's rates its debt AA
Outlook stable. This means the 30-year bankruptcy risk is only 0.15%. In other words, by 2053,
Amazon would do so in 195 of 196 scenarios.
return to zero.
Other risk aspects to consider. The biggest worry is that regulatory scrutiny may intensify.
For example, recently under the leadership of Linda Khan,
FTC on Amazon's e-commerce business
filed a blockbuster antitrust lawsuit. The ultimate goal is to restructure Amazon
and spin-off could seriously impact the company's growth trajectory.
because the company has a lot of data. In the event of a major breach, Amazon could face lawsuits, and its reputation takes a hit. Stock price. Criticisms of Amazon often relate to its valuation. From the perspective of adaptation rate, it's not a cheap stock. Higher than most big tech peers expected,
but below its own historical average.
it is far different from the historical price-earnings ratio,
Clearly, the market is willing to pay a premium for this.
but it brings the risk of stock price fluctuations. Think back, the stock fell sharply into 102. Sharp rise in 2023, and volatility may occur again in 2024.
Amazon appears to be at a resistance level right now,
Strong support is seen near $140.
judging from the stock price trend chart.
As long as the stock price stays at $120 above this key technical support area, it means that it is still under the control of bulls.
Nor should we ignore. Amazon is constantly increasing the number of outstanding shares.
Amazon still has a lot of cards up its sleeves. For example, increase your Prom membership by $5.
Or $10.to achieve a fair valuation.
Amazon still needs to grow its free cash flow every year. The company's case for long-term investment remains intact. Sooner or later, the stock will return to its all-time highs. Okay, that's it for this video. Next, ADP employment data, known as the Little Flying Dragon,
Will be announced before the Federal Reserve's latest interest rate decision.
Previous ADP employment surged in December, expected to hit a new high since August 2023.
Among them, service industry jobs surged.
But wage growth continues to slow. For now,
Upcoming labor market data
not a game changer for the Fed, but pricing in some more aggressive rate cuts will pose a challenge.
Then the big financial report comes out.
Time relationship video explains to everyone.
Finally, I wish everyone good luck with your investment.
The stock market is risky. Investment needs to be cautious.